Hi there, welcome to Kneppy Invest and welcome to the 29th of August 2025. Time is currently 2:16 p.m, so about an hour and 54 minutes left of trading today. And the agenda for today's video, we'll go through, I just want to mention one little thing, one little project I'm thinking of doing. And then we'll go through the ASX Today, have a look at the best and worst performing sectors, indices, and companies. And then we'll go through the top 5 stocks of the day. Interesting group of companies and quite a few smaller companies in today's top 5, which is understandable because we do see quite a few small companies, micro caps, small caps, release their results today. And we've seen a flood of them, in fact, and some interesting reactions from the market. And then we'll have a look at the chart today. Haven't quite decided just yet. Either Jumbo Interactive or Macmillan Shakespeare. I'm toing and froing between those two companies. Okay, now before I have a look at the ASX today, I just want to mention that today is the final trading day, not only of the week, but also the trading month. There are not 29 days in August, but 31. So the weekend is the final 2 days of this month. But companies need to have released their full year or half year results by the end of trading today. Now, some might release it early on Monday. And I've already seen one company going to trading halt because they're going to release their results late. I'm pretty sure that was Coventry Group, if I remember correctly. Let's have a look. Coventry Group, trading halt, and I'm pretty sure this is because they're releasing the results late. Yeah. So, actually, they don't mention there. Here we go. Yeah, release of their Appendix 4E annual report. Commencement of trading on Tuesday. So they don't expect it to release it in time, hence they've gone into a trading halt. Now, sometimes you will see companies release a little bit late on the Monday morning. Now, not every company on the ASX have to release their results today or during this week because there are quite a few companies that don't have the same financial cycle or financial year as the rest of the companies. So you will see quite a few results being released in September and November. I'm trying to think October. Not as much in October, but definitely September and November, we will see some companies release their results. And one of the reasons behind that is New Zealand have most New Zealand-based companies release their results in May and November. I'm pretty sure that is right. Anyway, now the other thing I should mention here is at the start of the reporting month, typically Corvus is the first company, but I really believe, this is just my feelings, that Credit Corp is the company that you wait for to release their results because they kick off reporting month. And for me, the end of reporting month ends with Harvey Norman. And that is true today. Now, they're not the last company to release their results, but they're one of, if not the last big company to release the results. In fact, most of the companies after Harvey Norman are quite small. In fact, we'll say they're micro caps. Okay, now I am planning on doing a little bit of projects, looking at the longer term performance of companies that saw good or bad reactions from the market. Now, I haven't quite decided how I'm going to do this because I only have a few days to set this up, but I might do it on percentage change, maybe greater than 5% or below 5%, so absolute value of 5%, or maybe 10%, maybe 9%. Haven't quite sure just yet. And what I'll do is I'll track the performance of both sides of the coin, those companies that saw a positive reaction and those companies that saw a negative reaction, and just to see how these companies perform from the day, not including the day, but the day after they release their results, just to see if there is any signal, any good signal. Like, for instance, a really good signal would be you buy companies that have a really good results on the back of, and when I say really good results, I mean positive reactions from the market, and you just buy. You just buy because they tend to outperform the market. I would suspect that. I'm pretty sure there has been some research done on this, but I just want to see it with my own two eyes. And on the flip side, if a company releases bad results, and that's on the basis of a reaction from the market, then you should short or sell those companies. So that's a project I've been thinking about. Yeah, unfortunately, I will be away for 2 months. And just got a notification, building on my house will commence next week. Yes, and they wanted a meeting with me next week, and I'll be away overseas for 2 months. I've told them that. I've told them that 3 times now. Okay, now on to the ASX today, and we've seen Well, we've seen, remember yesterday, small caps and tech had a bad day, but ASX 200 or odds had a relatively good day. Well, the complete opposite has happened today. Small caps and tech have had an absolutely brilliant day, and ASX 200 or odds have a relatively worse day because they are down. There was a bit of a rally, looks like, during halfway through the day, and they both were positive. Now they've pulled back a little bit in the last 30 minutes or so. So let's have a look at the best performing sectors. And you actually see that right here. There was a bit of a rally after all the brokers went to lunch. And as soon as they came back from lunch, we started selling again. I wonder if that is true because it does look like this rally started at midday and finished at about 1 p.m. So the brokers go to lunch. I'm assuming all brokers go to lunch at exactly the same time at midday and all come back at 1 p.m. And they saw the market had rallied and went, oh, we got to sell now. We got to sell. I'm just joking, by the way. I doubt that really happened. Anyway, let's have a look at the best performing sectors. IT, a brilliant day. I would say that's mostly been led by NextDC. Let's see if I am right. And I've just given away the stock of the day, NextDC. Let's see if I'm right by market cap. Yep, there it is, the fourth biggest company or the fourth biggest IT company up 17%. But there has been a pretty good day. WiseTech up 3%, Megaport up, Objective Corporation up, SiteMinder, Catapult, Technology One 0. They were all up today. The only company down is Dicker Data, but they had a good day yesterday, and that could be maybe a buy the dip situation, just maybe at this point in time. So that is why IT's had a good day, really led by NextDC. Staples had a pretty good day, energy as well. And on the flip side, real estate, healthcare have had a negative day. And is that, I'm assuming, Goodman Group? Assuming Goodman Group, but I could be completely wrong. The reason I just assume Goodman Group is because that's by far the biggest company in this sector. But it looks like the bad news day for real estate is across the board. Fun enough, PEXA Group is in this list. I would not consider PEXA Group to be real estate. I would consider them to be more like a tech company, but maybe that's just me. There is one company different than all the rest here, and it's PEXA Group by far. I would even say Goodman Group is not, well, it's sort of is a real estate company, but it's a little bit more than that. Anyway, so that's just me. Maybe. We'll just see. Okay, ASX 20 down 0.25%. I'm assuming the banks, it looks like the banks have had a negative day as well today. I'm wondering about iron ore. So if banks and iron ore have had a bad day, that would be a bit of a drag on our market. Let's see if that is true. And we'll do this, or list this by market cap. And yeah, CBA down 1%, Westpac, NAB both down, and BHP is up, by the way. So in fact, Fortescue's up as well. So iron ore's had an okay day, not a great day. Anyway, best performing company in the ASX 20, WiseTech. Yep, up 2.88%. Woolworths had a pretty good day as well after falling a fair bit the other day. And the worst performing company in the ASX 20 is Goodman Group, followed by REA Group, which is real estate, I suppose. Okay, now on to the top gainers. And coming in number one is, with a bullet, or something that drives really fast, Mclaren Minerals. No, it's not the driving company. It is a mineral company. And I will talk about this company in a second. Share price up 52.38%. Now, when I actually originally looked at this, Mclaren wasn't in number one. The company, there was another company in at number one, and I can't remember what it was. It's no longer on this list. Maybe it was, no, it wasn't Breakthrough. Yeah, so that company share price has dropped, and there's a reason behind that. But I'll talk about Mclaren in a second. Also talk about SenSen Network, share price up a fair bit on their results. One of those small companies, market cap $30 million, and that company is actually in my top 5 stocks. That's a fairly significant reaction, even though it's on a fairly low turnover, and it is liquidly traded. ActivePort, did they release results? I can't remember. But NextDC, stock of the day, Austal coming in just behind NextDC as in terms of running of or becoming the stock of the day, but also came in at number 2, and that's about it. All I want to talk about right now. And top gainers by market cap. NextDC, Harvey Norman released results, share price up, but not in the top 5. Austal, yep, and what else? McMillan Shakespeare very close to getting in the top 5, but it did not. And Smart Group is in the top 5. And McMillan Shakespeare is one of my potential chart of the day companies alongside Jumbo. So I might have a look at the chart. In fact, I might have a look at the chart of both those companies. Why not? Can't remember when Smart Group released their results. I thought it was yesterday. Am I right in saying or thinking it was yesterday? And if they released it yesterday, yesterday morning, I can't remember. Yeah, there was no reaction. And I'm wondering if this is a bit of a delayed reaction. And I'm wondering how many of these delayed reactions there have been. Now, maybe it's because of Macmillan Shakespeare, but that doesn't make sense. But I have seen quite a few delayed reactions this particular quarter, including Duratec. Share price up 12.1%. And they released their results, might have been yesterday or the day before. The day before, the 27th, and we didn't really see much. Oh, yesterday we saw the reaction. Yeah, delayed reaction. When they released the results, unless it was late, 27. No, it was in the morning. So it just seems like there was a bit of a delayed reaction with Duratec as well, which is sort of interesting. Yeah, that's really interesting. And I've seen quite a few of these. Anything else here? No. Okay, so let's talk about, Bisalloy still did release their results today. So let's talk about Mclaren, a company called, or with a ticker code MML, which is interesting because Macmillan Shakespeare, MMS. So they're very, very close to having two companies. In fact, I will talk about two companies in today's video that start the ticker code with MM. Maybe it's just me. I find that interesting. Anyway, Mclaren Minerals, nothing to do with racing cars. They did release drilling results. Very high grades in phase 1 drilling results. And I think I might have mentioned this in the past. When I was doing a paper, when I was in graduate school, my advisor said, never write the word very. And I've heard this from other writers as well. Very is an indication you don't know much. Well, I wouldn't say you don't know much English, but there's better words to use. Like very high grade would be exceptional grades or something like that. Anyway, that was one thing that really stuck with me, is the use of very can tell you a lot about a person. Anyway, I still use the word very a lot. Anyway, so very high grades in phase 1 drilling results. I would have liked to see maybe a grade number and what they're grading. And when I actually did see this, I didn't open up. I just moved on. Anyway, so I still don't know what they're drilling here. By the way, they're all titanium. Titanium. I can almost guarantee you with 100% certainty, I have no idea how to read titanium drilling results. So 1 meter at 24.1% HM in drill hole. That could be great. And based off the reaction from the market, that might be absolutely spectacular. I don't know. Standout results, 14 meters at 3.7% HM. I don't even know what HM is. Maybe this is something I should learn about. Anyway, so let's move on and just have a look at the chart for Mclaren. I was going to say Macmillan. Mclaren. Mclaren Minerals is this in... Oh, no. Maybe I should have looked at this earlier. I'm wondering if this company just listed, 2nd December 2024. And this is one of the problems with TradingView, is when a company delists off the ASX. And what is MML? What was... I forget. Oh, who used to be MML? When a company delists off the ASX and then another company comes along and IPOs with the same ticker code, they don't get rid of the old candlesticks or the old chart. They just stick with it, and there's just a gap there. So if we actually go to ComSec and have a look at their chart, and we'll go to the 1 year chart. It does go back to September. When did they list? December 2024. Okay, I don't have no idea. This is completely weird. Let's go to announcements and let's go back 1 year. They've got announcements all the way back to September. So why is there, or maybe they changed the name. Here we go. They did change their name, change of company name in December and ASX code. Okay, so now that makes sense. So again, this is another problem with TradingView. This company changed the name, but it's just assuming it's a different company starting on the 2nd of December. And before that, the previous trading day was the 9th of May 2022. So this company was Alp Silica. Actually, I knew that. I don't know how I knew that, but I did know that. And the ticker went from APS to MML. And I'm wondering if APS is still in the system, TradingView system. It doesn't look like it is. Anyway, if we go back to ComSec's chart, because I can't really see anything from the TradingView because of that little bad thing I don't like. If you have a look at this particular trading or this chart, a little bit of selling coming in today. Share price got as high as 4.5. So that means the share price was double at one point today. So a little bit of selling. It's understandable because you can see between 3 and 4.5 cents. And you go back just 6 months ago, the share price was in that zone for quite a while. So there would be a fair few shareholders who bought in that level. Massive volume coming through today. That massive volume, that's huge volume. And I'd say there is a bit of day trading in this right now. Okay, so there we go. Macmillan Shakespeare is not the company. It's called Mclaren. Let's have a look at the top losers. The top loser today is BSA. Won't talk about that company. I think they did release results, but they've lost 2 big contracts. But I will talk about HighCom in my top 5. Won't talk about Clinneville. They released results yesterday. And for some reason, a bit of a negative reaction today. I don't really understand that one. So I won't talk about Clinneville. That's another delayed reaction, by the way. So I'm not going to talk about delayed reactions. For me, it's I wouldn't say a fake reaction, but it's not as powerful as reaction on the day. DGL Group and PEXA Group both released results, and it looks like a negative reaction from that. But again, neither company got in my top 5 stocks. And the best gainer yesterday is down 11% today. And the company I was going to talk about is no longer here. The share price must have rallied a fair bit. Okay, what else? Linus Rare Earths did a couple raising, Mesoblast release results. I'm not sure what the market is thinking because I think their best financials are going to come in the next few years. So maybe it was a little bit of a disappointment. IDB Education falling today, not surprised there. What else is here? Nothing. Oh, Bioxyne. Bioxyne. I will talk. I have included Bioxyne in my top 5. They did release the results during the day. And a really interesting reaction from the market. But I thought these results were pretty good. But they also released some guidance for next financial year or the current financial year. And I thought the guidance was really good as well. So I'm not sure why the share price was down 15% at one point. But I can definitely understand why the share price is rallying. And I just wish I had the kahunas to buy when the share price dropped to about 4.8 cents. But I did not. And that's about it. So the company I was going to talk about was Avada. But share price is only down 7.32%. What can we talk about now instead? We don't even have to talk about anything, do we? We don't have to talk about anything. There's nothing else I really... What about DGL? Let's talk about DGL because the chart looked interesting the other day. I didn't spend much time on these results. And it's a share price only down 9.57% now. Didn't spend much time on these results. You can actually see the chart share price blowing up the other day or the other week, and the share price has pulled back. So let's just have a look at these results. I would be shocked if this was a massive miss. And what I'm going to do is just to have a look to see if the company released any sort of update. They did release a business update on the 6th of June. I'm hoping they did have some guidance within this. I can't remember. Let's have a look. They did have an outlook. So, what they've done here is just put in a percentage. I hate when companies do this, when they just put in percentage terms and not numbers. So while underlying EBITDA in the second half of financial year 25 is anticipated to be 5 to 10% higher than the first half, full-year EBITDA expected to be 15 to 20% lower than financial year 24. However, full-year underlying NPAT is expected to be 55 to 65% lower than financial year 24. I just wish companies, and I've seen this now a few times, put it in numbers because that means I don't have to do any work. Anyway, that's just me, maybe. I don't know. Let's have a look at their results now. Okay, and then okay, actually, they did put a percentage. So they expected full-year EBITDA to be 15 to 20% lower than financial year 24. So EBITDA 15 to 24% lower, and it was down 19%. So that is towards the lower end of that range, which is not good. So in a way, this was a slight miss. What else do we have here? Revenue 3% higher. So it looks like a decrease in margins, pretty big decrease in margins just based off this, with EBITDA down 90%, revenue up. Free cash flow from operations, 44.7 million, up 20%. I'm going to have a look at this. Why has a company have pretty good operating cash flow? They might spend a lot of money on, what do you call it? That's notes. On capital expenditure. So they could have high depreciation amortization. Let's have a look. Yes, they do. Almost $34.5 million in depreciation amortization. And let's just have a look at the cash flow. By the way, this company has equity of $341 million. And the market cap of the company is 118 now, but they might have a bit of debt. I can't remember. But anyway, in fact, we can look at that. Debt. They do have a little bit, $104 million of debt. Or in fact, it's about $110 million of debt. So the enterprise value of this company is more like 228. But still, it's currently DGL is trading below book value. So you could say there's a lot of value here just based off that. Okay, now let's have a look at the operating cash flow. Yeah, operating cash flow positive, 44.7 million. But they were operating cash flow positive by a fairly high amount last year as well. $20 million just on capital expenditure. So free cash flow positive, 24 million. And they also $18 million just in lease liability. So if you add leases and capital expenditure, the real free cash flow is about $7 million. They also repaid a fair bit of debt, and they made some purchases. Oh, by the way, they also sold property, plant, and equipment. So maybe I should add that back. So free cash flow was not that bad, just by looking at this. Now, sometimes they will put a note next to operating cash flow, and that will show you the reconciliation between profit and operating cash flow. They have not done that. Usually you see the reconciliation. I'm just going to go through this very quickly just to see if they have. And they just forgot to mention it. No, it's fairly weak. Okay, so let's have a look at the chart via Trading View. So this looked really good the other day. Someone was mentioning this in the chats. I don't want to say the wrong name, so I won't try to guess. I do remember someone getting excited about the DGL share price rallying the other day, 1 week ago, no, 2 weeks ago. And I thought, this is starting to look good. And then the results today have sort of put a bit of a dent in that change in momentum. Now, this has happened a few times in the past with DGL. In fact, it happened in February 2024. There was a bit of positive reaction from the market just before they released results. And then they released results, the share price dropped 41%. So we haven't seen that sort of negative reaction, but we have seen this happen a few times now before the company released results. Some positive vibes, and those vibes have been destroyed. I still think there could be some value in this company at these levels, but I'm going to wait just for a bit of positive momentum in the share price. And hopefully, if you see some positive momentum in the share price, that means that the company might be releasing some positive news, financial news. Okay, now on to the top 5 stocks of the day, and we'll start off with Bioxyne. Yeah, this one, you had to be quick with this one because the share price went to a low of 4.9, high of 6. They released the results about midday. Results were good. No complaints from me. Let's open up the results, and they also released guidance as a separate announcement. You don't usually see companies do that. Usually companies put the guidance into the announcement itself. Okay, now this was pretty good. They have issued at least 1 or 2 upgrades. So originally the guidance for revenue was 25 million. They upgraded to 28 million, and they delivered $30.4 million of revenue. They're profitable. Where's the profit here? They don't even mention the profit here. They're profitable. I thought that would have been the first thing they mentioned. We are profitable. Here we go. Here it is. Profit of 4.9 million. They had a loss of 12.9 million last year. EBITDA positive 5.4 million. Revenue went from almost 10 million to above $30 million in a year. So really nice growth in revenue. Gross profit margins did drop from 39% to 34%. I'd like that to actually improve, not drop. So that's one little negative. Now, I might have to read this as an explanation why margins dropped, although product gross margins rose. So yeah, I'd like to see why that has dropped. So I'll have to go through this with finer detail. Company's cash flow positive and profitable. And this was, I think, a little bit of a beat. But they also released a bit of guidance. And I had a look at this guidance for financial year 26. And I actually read this when I saw the share price was down 15%. So I thought, this is going to be bad. This is going to be really, really bad. And they're expecting revenue of 65 or between 65 and 75 million. Revenue this year was 30 million. So they're expecting revenue to more than double, and they're expecting EBITDA to more than double as well. What was the EBITDA again? It was about $5 million. Oh, I've already forgotten. And sometimes I just have to, EBITDA 5.4 million. So expecting EBITDA, revenue and EBITDA to more than double. So I thought, okay, that, not sure. Was the market expecting even more? I don't know. This was a weird one. And yeah, the share price had dropped at that point by 15%. Anyway, so interesting reaction from the market. Maybe, I don't know, maybe this is we're going to see the share price rally significantly on Monday. Now, the share price has risen a fair bit recently. So maybe that's it. I don't know. Maybe it's buy the rumor, sell the news, which I think is a stupid thing to do. But we have seen a little bit of buying coming today because the share price did get as low as 4.9 cents. Not massive volume either. So I don't know. I still like this chart. I have no problems with this chart as well. I just wish I had the balls to buy when the share price got to 4.9, although I didn't see it. Didn't see it at that exact point. Anyway, so that's Bioxyne coming in at number 5. When I did have it in my top 5, share price was down 15%, or something like that anyway. Coming in number 4, we have another company down a fair bit, HighCom. Share price down 31%. Now, the share price of this company has been rallying because of positive vibes in this sector. They do produce armor for the military and police and that sort of thing. I'm pretty sure they do something when it comes to drones as well, but I can't exactly remember. Anyway, share price had been rallying. I saw their results because I actually am a shareholder of this company. It's in my super, and I've held HighCom for many, many years. And I saw these results, and I was like, wait there, they were profitable at the half year. They were profitable at the half year, and they're not profitable anymore. And I was like, ah. And I just went, ah. And they mentioned here, this result marks a positive turnaround after disappointing financial year 24 result. Wow, with the share price dropping like that, the market saying this is a disappointing result. And I also compared the full-year results to the half-year results, and everything dropped in the second half. And I think that's why the share price, there has been a bit of selling, because everything dropped in the second half of the year, and the company is no longer profitable. They were profitable in the first half of the year. So here we go. So revenue was up only 6% from last year. So it's, yeah. And now their loss of $1.2 million from a profit of over $1 million in the first half. So the second half, I think, was possibly disappointing to the market. I just wish they broke down all the numbers in each half. Let's have a look. Were they operating cash flow positive? Let's have a look. They were, but they were free cash flow negative by the slightest amounts. Anyway, so, the other thing, this was very important. At the half-year results, the company had cash of over $8 million. Maybe it was 8.5, and now they've got cash of 5.8. And I do think the market saw that and went, oh, bit of a cash burn there in the second half of the year. So they could be concerned with this increased cash burn in the second half. Now, the increase in cash burn in the second half could be because and they don't have the notes here, which they would include notes, they could have increased their inventories, but they didn't. In fact, inventories dropped. Now, if I saw a pretty big increase in inventories, like it went from $17.8 million to $30 million, that would be a sign that they are ramping their inventories up for sales. Yeah, it would make sense. Anyway, so fairly negative reaction from the market, but it's a really small company. And this company, the sentiment in this company goes in spurts, goes up and down in spurts. So in fact, it's more of a trading stock. I should be trading this one instead of holding it for the long term. So market cap is $31 million with the share price dropping 30% today. So let's have a look at the chart for HighCom. And you can see, yeah, really nice run up in the share price, on the back of that really sort of positive perceived tailwinds behind this company. And I think maybe today has destroyed that positive sentiment. But if you have a look at the weekly chart for HighCom, it's been a wild ride. And I've been holding shares in this company for this period almost. And I should be trading it more. Yeah, it's not a high quality company. It's nowhere near a high quality company. I don't know why I keep holding it. Don't know. It's one of those questions I should ask myself. Okay, coming in at number 3, another small company. Oh, just small company after small company. But look at this. Share price up 35.71%. It was up by even more than that. Well, not that much more. The high today was 3.9. So it's actually near the high of the day. For some reason, I thought the share price was up 40%. Anyway, what can you say about this company? I actually do follow this company a little bit more closely than many other small caps, even though I'm not a shareholder. And the main reason is I do like where this company's headed. I do like the financial performance. But my only concerns about this company is just the lack of liquidity, quite small liquidity, and you do see a lot of volatility in the share price. So definitely not a company you want to trade, more the type of company you might want to own for the longer term. Anyway, so they have announced deals with many Canadian cities. They also mentioned, what was it? They renewed a contract with Brisbane City Council, something like that. But this company, a nice growth in revenue, 26.5%. Gross profit up 38.3%. Gross profit margin up 70 basis points. Is that 7%? We'll just say 7%. Gross profit margins up from 72.3% to 79.1%. Profitable now. The company has gone from a loss of 3.6 million to a profit, and EBITDA also positive, and cash flow from operations, operating cash flow positive by 1.7 million. Now, this company, another reason I look at this company is because their Appendix 4Cs tend to be quite good. I like their Appendix 4Cs. But it looks like the reaction or what the market really want to see here is nice full-year results. Okay, now let's just have a look. I don't remember the company releasing any sort of guidance. Let's just see if they did release guidance in the first half. Yeah, this is something I should have done before I started recording, but that's okay. Sometimes you think of things on the fly. I'd be shocked if they released guidance. No, they didn't. Anyway, let's have a look at the chart for SenSen, and you'll be able to see the, maybe not in the weekly chart, but definitely in the daily chart, you'll be able to see the, look at the weekly chart. This is probably not the same company. This goes back 10 years. Definitely not the same company. But if you have a look at the daily chart, you can just see the volatility in this. The time to buy this is if the share price gets to 2 cents. And it was at 2 cents back in March. In fact, it fell below 2 cents, very brief period of time. Anyway, I wish I had, again, the balls to buy this company back then. But you can definitely see the volatility in this particular chart. So that's one little negative thing about it. But again, if you really like the company, lack of liquidity actually can be very beneficial in the longer term, particularly if the company grows quite significantly. If, that's a big if. Okay, coming in number 2, we have Austal. Share price up 14.3%. It's really interesting because the share price was already significantly higher. Okay, this was a beat. I didn't write anything down for Austal. I'm pretty sure this was a beat. I did a lot of stuff on NextDC, and Austal, nothing. Didn't even look at it. Anyway, I think this was a beat. And what we can do is I can let Capital Brief do the work for me. Sometimes I do that if I'm a little bit too lazy to actually look at a company. And I'm pretty sure, yeah, there we go. Austal shares rocket as financial year 25 result beats forecasts. And there should be hopefully a few quotes from analysis here. No, there's not. There's not. Now, what I could do here is, and sometimes I do this as well, in preparation. So the company on the 5th of August released earnings guidance update. Now, this was only 3 weeks ago. So this would be really interesting if actually their results were better than expected just 3 weeks ago after the end of the trading month or year, year. So they mentioned in this particular earnings, this sort of makes sense. They mentioned in this particular earnings guidance update released 24 days ago that EBIT will be no less than $100 million. And this was an upgrade because previously it was not less than $80 million. Now, this really makes sense because I actually do know their EBIT. It was something like 118 million. So it was a true statement, but it was significantly greater than 100. In fact, yeah. So I think the market was not really expecting that. Okay, EBIT 113.4 million. Okay, I thought it was 118. A little bit off there, but still a massive difference between the EBIT and saying no less than $100 million. Profit up from 14.9 million to 89.7 million. Revenue 1.8 billion, up 24%. Cash at bank 584 million, up from 173.5 million. Cash position 453 million from almost flat. Operating cash flow 406 million, $13 million outflow last year. So a massive turnaround in the fortunes of this company. And that's because of increased defense spending throughout the world. And this company is taking advantage of that. The problem I do have with Austal is I'd say this is a highly cyclical company, and some of this spending might come to an end for some reason. And you'll probably see that in the chart. With this company, particularly that daily chart looks spectacular. But when companies go in these really nice, when they're in these really nice periods, these are what the charts typically look like. But if you have a look at the weekly chart, yeah, you can see share price goes up in spurts and then drops a lot, up, drops a lot, and now it's in one of those spurts. Now, but the other thing I'll probably mention here, if you have a look at this, is the top of the spurts keep getting higher. So you'll probably say that this could be a longer term hold, but just be aware that just because it looks really good for this company right now doesn't necessarily mean it's going to continue over the next few years. And we saw this in 2019. In fact, in 2019, share price went from $1.50 up to $5 and then fell all the way back down to $1.50. That was good buying, $1.50. And the share price was $1.50 in October 2023, so 2 years ago. And since then, share price has gone from $1.50 to $8. I personally probably would not even think about buying into this. I think it's maybe a little bit too late, but who knows? The share price just could keep on going up, particularly if countries around the world keep on spending military stuff, defense stuff. Okay, company coming in number one, we have NextDC. Hopefully, the share price is up by more than 14%. Yeah, up 16.65%. Okay, I am a shareholder of this one. This is also in my super. I don't like watching or reading this company's reports because they're still not yet profitable. The one thing, they're not yet profitable. They have a really high EBITDA, but they are building out the infrastructure. Now, this was an interesting one because I read their results and their outlook, and I had no idea how the market was going to react. I had just no idea at all. Okay, so revenue increased. So revenue increased 22.9 million. Now net revenue was 350.2 million, which was a slight beat to the financial year 25 guidance. Underlying EBITDA was 216.7, sort of in the middle of their financial year 25 guidance. And the capital expenditure was greater than the financial year 25 guidance. So even though revenue was a slight beat, and underlying EBITDA was sort of in the middle, just above the middle. With capital expenditure being higher than expected, I was thinking, I'm not sure how the market will react to this. It was like, initially it was starting good, and then greater capital expenditure, I was like, not quite sure. And then they also gave some an outlook somewhere here, financial year 27 or financial year 26 guidance, nice increase in revenue and underlying EBITDA. But was it enough? I then compare it to expectations via this site and Morgan's calendar, and it seemed like, okay, it's not, financial year 26 guidance was not that significantly different than the consensus. For instance, if you have a look at their guidance for EBITDA, consensus was 215 points. No, wait, that's the wrong year. Consensus was 235.4 million, and their guidance was between 230 and 240 million. So consensus was smack dab in the middle of their range. So I was thinking, I don't know. I'm not sure how the market's going to react to this. So I still don't know. I still am a little bit surprised. Now, I also read what Morgan said here in regards to megawatts sold. So we forecast 91 megawatts sold in financial year 25, and that was a little bit lower than expected. What they actually did do, but I think it was financial year 26. I think maybe what this company is expecting in financial year 26 is a little bit better than expected in terms of, what do you call that? Megawatts, yeah, because I actually mentioned here, earnings and return on capital ultimately matter most, but the key shorter term driver of this company share price is megawatts contracted. And so I do think that their financial year 26 So they mention here, this compares to 69 megawatts in financial year 24 and expectations for additional 122 megawatts to be sold in financial year 26. And I have a feeling that that was a little bit better. So what was it again? 122. 122. And they mentioned, I'm not sure exactly which one to read here, but they mentioned 134 megawatts will begin progressively converting into billing rate at a record rate. So I'm assuming that is in this financial year. So maybe it was just the megawatts, or whatever you call it, the forward order book or the order book. I'm not even sure what to call it. Anyway, so I'm wondering if that is the reason why the share price has gone higher today. Now, the company did release their results last night. In fact, when I actually had a look at Upper Reef, there was no mention of NextDC. I was like, why is there no mention of NextDC? They released the results and share price is up by a significant amount. I was going through this and going, where is it? Anyway, so I did have a look at Cover Brief yesterday, and there was a mention of NextDC, but there was nothing in regards to analysis. So I have no idea what analysis are thinking, but obviously someone loves these results. So let's have a look at the chart for NextDC. For those who don't know, this is a data center company. Anyway, so in fact, I would say just by looking at NextDC's chart, you can actually look and determine when the data center thematic had its sentiment shift from positive to negative, and it's shifting back again from negative to positive. So the bottom of the data center negative sentiment was back in early April. Share price of NextDC got down to 9.5 after being as high as $18. So the market value of this company halved just because there's a bit of negative sentiment in data centers, and now it's shifted again, and the share price is going back up to where it started. And crazy, just because of sentiment in that space. Okay, two charts I want to look at. First, we'll have a look at Jumbo Interactive, and I'm pretty sure there was a comment about this. You know what I should do? Should do this. There we go. Archie McCall says Jumbo Interactive is breaking out. In fact, DG Home and Garden says Jumbo looking good, low risk. So let's have a look at the chart for Jumbo Interactive, because I do like this one. So they release results. Share price has popped up. Moving average crossover. I do like this chart. A little bit of a pullback today in the share price. I'd love it to see it pull back to 1150. And this is probably one I should have bought the day after they released results. So a beautiful looking chart for Jumbo Interactive. And I'm wondering if there's pretty good value in this company as well. And the other one was Macmillan Shakespeare. This is one I'm trading right now. And I thought, yeah, there's good value, even if the chart doesn't go all that well, or the reason I bought doesn't go all that well, if that makes sense. If the chart doesn't go the way I think it should go, I could get a nice little dividend on top of it, but it's done the complete opposite. It's just gone really nicely, and I do think this one has good value as well. So this is another beautiful chart for Macmillan Shakespeare. Well, not another one for the company, but this is a nice looking chart. Okay, that is all I have for this ASX Daily Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.